So I think everyone's excited to hear our first talk for today. Our first speaker, as our president has mentioned, is awarded the Best Technical Analyst of the Fund Managers Association of the Philippines. So for those of you who don't know, this group manages almost 5 trillion pesos worth of the country's funds. So to be awarded is such a great honor. And not only once or twice, but for 5 straight years. So I'm sure kilala niyo na kung sino to. He's our beloved and most trusted COL Chief Technical Analyst, ladies and gentlemen,
Mr. Juanis Barredo.
Tiniturn.
Thank you. All right, good morning, everybody. Does everybody in the back hear me? Okay, thank you. Now, we started this year on a very, very strong note. Coming into a Philippine context, our December wasn't too good. At that time, the US markets were being very, very soft. And things have changed quite a bit for quite a number of markets. And hopefully, we wanted to be able to impart to you what was the differences in how these things all came about and what strategies we'll be using forward to be able to engage ourselves given this. Now, I know very recently, but perhaps not in the last few days, our index has actually gotten stuck for a very long while. And that was actually part of the program. If you remember what we talked about earlier, and I'll show you a little recap of that, you might be able to sync with what we had in mind during that particular period. So just to be able to give you a very brief wrap-up of what we talked about in our last market outlook, we did that last time in the end of January. We were saying that the immediate upsides of the index would be something closer to about 8,200 and 8,300. We also said that the first half will be characterized by very zigzag motions. We also said that as long as the PSE and its pullback would remain over 7.3, preferably over about 7.580, that would be the preferred scenario to see a continuation swing for us. So far, the index has managed to do that. And of course, seeing that potential, can this market move on? Right now, I know we're stuck right there, about the 8,000 zone, but we believe that we can extend this and at least proceed towards 8.6 or about 8.650. And given that this was the cast that we put out in the beginning of the year, we're maintaining that particular argument. So we said that amongst the potential scenarios that could actually frame itself up, a preferred scenario would be one of this character. You would see a graduated pullback into the market, maybe do that once or twice, zigzag, and then attempt to be able to work off an upward movement coming out of that. And just to show you what we've done, this is where your index is. So the possibility that we are syncing with what we talked about so far is still very strong. We did hit 8,200. It may have been an intraday high, but we hit it nevertheless. It managed to be able to come back and do some zigzag motions, as you see the consolidation pattern is giving you. It pulled back all the way to about 7,580 or 7,590, if I recall the actual low. And all that's left is one more argument, which is the move back to 8.6 or 8.650. So this is the only challenge that we have left to be able to complete what we were looking at into the first half, and we're quite supportive of the fact that something like this can still take place. Now, given the context of all the other markets also showing some significant rallies, particularly if you'd see in the chart you see there, China's actually outperformed most of the world markets. The black bar shows you that the Shanghai index managed to be able to climb a whopping 20+% so far year to date. And if you see on the opposite side of the stream, on the left side, is the Philippine index. And the Philippine index is playing catch-up game there. So far, only taking about 6.5% return. But in the last few days, we did see some activity also pick up. Now, we do hope that because we didn't see the Philippines extend itself like many other markets, that the Philippines would still have some juice to be able to push back in. Because we're kind of delayed here. Maybe there are certain things keeping us held back, but we'll deal with that in a while. But it also means that the Philippines has not moved and may still have the potential to be able to move without going into that overbought state just yet, which I would take into a very good hand. So, in order for me to try to make an assessment where things are stronger or not, you've noticed I'm looking at indication here of potential strength. After the index fell back down to that very low that you see there, it's managed to make what we call a Fibonacci rally of about 61.8%. I know some of you may not understand that, but just think of this. If you see the three red lines there in the middle, if in a recovery, the index hits only the first or the lower red line, then that means that the index rally was weak. If it hits the middle band, okay lang. If it hits the third band, the higher band, that means that the index is showing power into its rally. And so that's the first good sign that your index did. After that, the index blew itself out, got a little tired, and started to wind up. And the wind up, chart on the right, managed to be able to make a reaction. And the reaction now, I also drew a Fibonacci retracement line. There are three lines drawn there. This time, since the index is going downwards, let's interpret it the other way around. If in the reaction, the index falls for the first line of the Fibonacci zone and not all the way down, that means that even the pullback of the index was showing strength because it did not want to go all the way or deeper down into this next support level. That also tells you that the index is showing some degree of strength. And so if in the rally it showed strength and in a pullback it also shows that resilience, that tells me that the index is winding up for something and there's something prospective at hand. And that leads me to be able to argue of the potential for the index to climb further from where we are today. Now, of course, we do have some things that people are obviously considering. Why did the index wind up? Why didn't we go as high as many other markets? Well, as you see there on the right side, you might have quite a different number of things we are currently dealing with. Now, we are all coming to be able to conclude that we've seen a lot of improvements there. Inflation has gone down. Interest rates have stopped going up, at least. In fact, the 10-year yield has actually simmered down a little bit. We've noticed that GDP inched up in the last reporting, and of course, there's now this talk that the potential reserve requirement of banks may actually be brought down. And that might come out to produce quite a positive move because for every percentage point that the BSP reduces that by could unlock something between 90 billion pesos worth of potential investments or funds back into the system. And that could prove to be quite helpful. Now, looking into where the index is, in a bigger picture, the index has managed to be able to bounce from the range lows that you see here. The range lows, if you notice this point here and this point here, have managed to be able to show enough support to be able to counter prices, and that tells me that the worst was over, and now we are in recovery mode. If you're looking that also into a shorter period of time, you will also notice in this picture that I've drawn the first rally here was the first rally that you've seen in this movement here. This second rally that you're seeing over here is this second phase here. The similarity between them is they both have a wind up after the first initial rally. This one did it here, ours did it in this side. And normally after that wind up, and that's when you see a little bit more pricey action on the movement on the upside. So we're hoping that after this cascade that we've been seeing and looked like it tried to do it the other day, that the facilitation process for the market to be able to improve is clearly very much there. We're coming away from a wind-up, and there's potential for the index to climb here. The only difference is this. When you learn technical analysis, the markets tend to repeat their action, but they don't repeat it in every single series, but they do it every other series. So in the first rally, if you see the first rally we have over here, we had a very, very fast and accentuated advance. The next one that normally comes will be more jagged. So in other words, you're not going to see a very, very fast movement, but rather you're going to see a channeling-like movement, a more gradual one. An upward move, but a slower version. Nothing wrong with that as long as we understand it. So the potential for the market to be able to move on after looking at some of the signals that it has really is quite good. But like I said, you'll probably see this type of movement. You see how it managed to be able to cascade upwards rather than just singly going up very, very fast. And quite a number of indications are pointing to that. The market has this very low, what we call ADX reading that tells me that the temperature gauge for its acceleration is absent. So that also tells me that it's going to be a slow move. Or sometimes when you get a breakout swing, you will see it'll come back in first before it moves again. And it's going to be a little difficult because if you are a momentum trader, you might have a little difficult time. Now, if you use what is known as swing trading, which captures the essence of a cyclical type of up and down movement, that might be a much better system for you to use when you look into your trading. So just be very careful. I mean, breakouts sometimes could prove to have some failures. If you want to know what that means, please do join me in my session later on this afternoon when I talk about trading ranges. All right. Now, there might be, of course, potential problems and hopefully things that can also generate better substance for us here. The US market is quite stretched. It has not corrected too much as of yet. It has not broken any support, but it's still very much aligned into advance, but it's been doing that for a while now. Overbought readings are very clear. Now, it may not force the US market to collapse, but what it may do is it might hinder its ability to climb up very sharply. And because of that, again, you might see some cascading moments. Sometimes you might experience a hiccup day 2 or 3. In other words, you might just see a dug, come back down, stop there, try to rally back again. And normally, markets do that before they top out. So it's very difficult to tell you, oh, it's about to crash. More likely, that's not going to happen because the momentum for the US is clearly still positive. Europe and parts of Asia are also showing certain degrees of overbought conditions, and that would also attest potential problems. Now, why do I say it's a problem? Well, because if the US and other parts in Europe and Asia begin to sneeze, we may also catch a cold. And that's why we just have to be ready for some cascading motions that can be driven by this. Next, we've also seen that the dollar continues to remain quite in a clear uptrend, maybe more cascading one, but still, the recovery in the dollar has not ended yet. Now, initially, I thought that would hinder the movement into our peso. If you notice, in the first few months of the year, the peso did weaken a little bit, but it managed to be able to generate more strength right now. And the other bonus that we may also have is that oil prices in the short term may look like have peaked. And that would mean that maybe those people watching inflation may not feel too threatened because more likely oil will probably stop where it is, consolidate, maybe even pull back lower. And that should prove to be a benefit to us. So just very quickly on the US market, as I said, you can see the picture here showing that the US market is coming towards the range upper bands. And because of that, there might be some need for it to cascade, pause, consolidate, or maybe even pull back down. And I'm looking at maybe a pullback to the 50-day moving average as a potential corrective action. For the US dollar index, it did bump its head on the high band of its range, but clearly you can see an upward moving channel up here. And that means that the dollar should remain strong. But if any of you are attempting to be able to move into that particular currency, you probably want to buy it on the lower end of the range, either in the mid zone or in the low zone of that big channel that you see there. The Philippine peso has U-turned. Last time when we were talking to you, there was that motion there where you see a very, very big spike into the rate. If you notice these very sharp movements, well, this was a time when we were having issues. The BSP didn't know what they were doing in terms of how to control inflation, so they tried to be able to push rates up. During that time also, there was some movement out of the Philippines and being scared of that, and I think they've managed to take good control of it now, and because of that, the peso is actually quite vibrant. In fact, it might even attempt to break that supportive barrier you see there on the bottom, maybe even pull back closer to 51, or maybe even possibly 50. So the peso seems to be showing very strong alignment right now. With terms of oil, oil has just broken an uptrend line that it's managed to have in the last so many months. And I think that the advance that we've been seeing in oil has ended. And for the meantime, we'll probably see a cascading skewing maybe more on the corrective side for oil. So like I said, I don't think that will be too much pressure on us right now. So given as things are, I think we will continue to be able to look at the market with very individual strategies. I don't think the market will move broadly altogether. So that means there will still be some work on our part to try to look for the necessary issue that looks interesting. Zigzags will continue to show itself. So price channels will form. And if they're going to do that, you want to be buying either in the mid or lower end of those channels rather than buying always racingly upwards. So be very careful about those issues, especially you see a breakout price. After a breakout from a range, you see 2-3 days of upside, you already want to back off because as I told you, that's not just going to shoot up to the moon. That's going to cascade, so you have to wait for the next setup to be able to get in. So be very careful of stretches because that's not what this market wants. If you notice what we saw in the last few days, the index tried to break out of resistance. Next thing you know, it gets shot back in. I don't think that's the end of it, but it's just telling you that it's been 2 or 3 days of that advance, and it needs to take some profits, let it time to breathe, to be able to regain its composure. In terms of looking at the independent sectors of the market, we feel very strongly about the 3 or 4 sectors first. You have the property index, which shows you the strongest movement in our market so far, followed by the services, commercials, and the financials. The last 2 are really the holdings companies and the mining and oil sectors. I think the holdings companies being held down by 2 big holding companies, and that's why you're probably seeing much of the weakness there. So what I would do is I would focus on those first 3 or 4 sectors first and look for opportunities to pick them up once corrections finish, because that will be the prime movers again, because I don't think they would just end it after showing what they have now. Now, in terms of the issues that I'll be focusing on, so I decided to be able to give you a list of stocks that's in my radar screen. Now, if you can see, there's a lot of colors there. It's not because we're far away from Christmas, but the whole idea here is I have to tell you whether some of them are extended now, the ones in red. Some of them are losing some momentum, the ones in blue. And the ones that are colored black seem to be still okay with their technicals, and that means that could still be some room for improvement. But just because it's blue or red doesn't mean it's bad. It just means that I like them. Just wait for the better part in timing or setups to be able to engage them. Now, I'll try to be able to present some of these companies. I know there's a lot of them, but I've got about 8 minutes to be able to show you my views for each and every one of those. So just bear with me. I'll do this very, very quickly. So Ayala Land was actually quite strong. It spearheaded much of the movement into the property sector. It managed to break out of that very big band, and hopefully we'll probably see a correction first so that those people who were not able to buy Ayala Land may have an opportunity to do so. Reactions towards 47 to 45.50 are preferred. Next, AGI. Now AGI broke its trend line here, as you can see, and that might prove some, oops, where is the terminal here? Sorry. That might prove some weightiness at this area here. So if you see the recovery taking place in AGI, I think that it might take a little bit of time to do that, but it seems to have hit the immediate levels of support. The only thing I'm just going to be watchful for is normally corrections. As you would know, through an Elliott wave, normally corrections go through 3 waves, what they call an A wave, B wave, and C wave. So what I see here so far, I see an A, I see a B, maybe there might be one more. I hope not, but there might be one more pullback. And in that pullback, you might look for better opportunity to be able to buy it. If not, then you can just maintain your position and just hold it at your next support, which is at 1440. Next, we have BDO. Now, this particular stock pushed out of its range, and we did see a breakout motion in there. I guess the question we're going to ask ourselves is, will this continue, or will this stop, or what's going to happen? Because in 2 days, it hit its target immediately. All right, so that resistance was closer to about 141, 142. It hit that yesterday, intraday, and then it managed to be able to show some pullbacks. So please don't be buying after an extenuating advance like that. You should wait for prices to calm down and purchase it when prices show more durability into the decline. Okay? And anyway, potentially for this, I think you'll probably see it advance, but you might see more cascading movements as we talked about earlier. Bloomberry. Okay, Bloomberry, I'm actually neutral here, although I like the activity that's been going on. I'll just have to be very careful here as prices are softening up and going towards the lower end of its channel. Right now, that support area is closer to about that's about 1209 to about 12. So we don't want that area to be able to break. If not, it might generate a much longer consolidation pattern. But so far, I'll hold it if I do still have this right now. Then we have BPI. Aggressive trade because it's coming out of a downtrend. And because of that, you will understand the fruitfulness of sometimes why you have to wait for what we call a trend reversal. If you want to know what that is, please join Edmund's talk later when he attempts to be able to discuss how to identify a trend reversal so he can tell you exactly when you're supposed to enter on circumstances like you see here. But potentially, there's slight divergence in BPI, so there's a potential reversal action that may be coming out of this. ICTS. Now, this company has gone up quite strongly. And if you notice, there was a situation there where it gapped down for a while, this area here. And that gap down was probably caused by everybody finding out that there was this change in fundamentals because one of their ports were put under threat. But right after that, the stock managed to be able to climb up, good volume came in, and it was as if there was no tomorrow, people were buying this stock. Unfortunately, it's gone all the way back up to the high band of the range, and at the high band of the range, you have to be more defensive, not aggressive. So here, you're going to have to wait for prices to be able to pull back. And this is also one of the reasons why the services index popped out there as one of the stronger ones. Next, we have LTG. Now, this particular company, I think, is doing quite well in terms of its technical pattern. It just broke out of a falling wedge. That is a bullish pattern. And consequently, when you get a breakout of that type, normally you'd probably see this climb back up closer to the previous high. So this might be something worth looking at. But do take note that sometimes this issue does have problems with liquidity. And that means sometimes buying shares and getting out of the shares that you have sometimes may prove to be difficult, and it may cause some differences in the price spreads that you end up engaging in. So just be very wary of that, and maybe just tone down your volumes. Next, we have MegaWorld. So if you see MegaWorld has now inched closer to the upper band of its wind-up, and it looks quite in potential of a potential breakout situation there. MACD looks like it's also turning quite well, and so that should be able to produce some effect. Again, I'd like to be able to point out what I said earlier. Remember about breakouts today. The breakouts in a sideways moving markets will be a bit more difficult and more protracted. Or in other words, it has a delayed effect before it starts moving up. So be careful about chasing prices. You've already seen a very sharp day now, although it hasn't broken up yet. I'm worried that if it breaks out into the next day or two, and then you chase it much higher, your risk is going to be much higher as well. So you better be prepared to do that. So always try to be able to buy prices on a reaction closer to support. Meralco also looked to be quite good. Not very aggressive, but at least the channel is still very smoothly pointing upwards. And the potential for this to climb, I'm looking at something between 395 or maybe something closer to 400. Then we have Robinson's Land. Robinson's Land also moving into an upward channel. And so the high band of this will sit closer between 2480 to 2550. So if you have that, go ahead and just hold it and place your stops and wait for your targets to come around. Security Bank. Now, Security Bank broke out of that very lengthy consolidation highs that it's had. But unfortunately, yesterday, after showing very good strength, it sank back in very sharply towards the close of the day. That doesn't nullify the particular movement. It just tells you what I was telling you earlier. You're going to have a very cascading swing here, and that's just a clear example of the volatility we're going to have to bear with in this type of sideways or channeling up situation. So do hold that. Look for potential bias now that it's coming back closer to the supportive area. Potential upside closer to 190, maybe even 198. SM also moving to the top end of the range, and we'll need it to be able to push a little bit more. If we can breach that 976 or 980 zone, then that should get the cat out of the bag and allow it to be able to facilitate it recovering back to its previous high, and that could generate a potential move closer to 1,020 or 1,032. San Miguel is also pressing into the narrowing end of its range, and hopefully we may be able to break over that resistance band of the 182. If it can manage to do that, then San Miguel should be able to cast itself back into an advance and continue on. Short-term potential upside 185, looking down the road, maybe something closer to about 195 to 200. SM Prime was also broken out. This chart doesn't show too much, greatness into what we've seen. And the reason for this is if you look at almost a 2-year chart, SM Prime has been stuck below that particular high range that you see here, this area here, since December of 2017. And the price range that it's been jumping up and down below is 8 pesos in size. And normally, when you have a very big pattern breaking out, that should lead to a consequential up move for that particular stock. So do keep this into your watchful list. And the final index stock I have is URC. And this one also managed to be able to pull up. I believe that some people are now saying that maybe there could be a potential turnaround situation in its fundamentals. And it came out with its earnings report the other day, and the reason why prices managed to be able to jump up very spiritedly. Again, it's broken through that band. Coming in at this price, I think, would be a bit ridiculous. So you really want to wait for prices to pull back before we can get an essential wind-up once again. Now, I do have quite a number of charts that I included into my list, but I don't have much time to be able to do it. Maybe if I can look at some of them in the Q&A, then maybe we can look at the context of that. But if all of you have your emails registered here with us today, I will send you a full list of everything that I've managed to do so that you can get the fullness of the essence of all the other charts that we've managed to cover. They may not be index stock, but they're quite popular, and a lot of people like to trade them. I'm sure many of you would probably want to be able to look at some of those also. So with that, I'd like to be able to give you again the opportunity to say thank you for coming, and of course, to give you the rosy aspect that our market is still improving despite the consolidation we have, and just to be able to learn to anticipate the side-swinging nature of this market rather than a very forceful advance, so that you can come around to be able to challenge yourself to pick prices up on a reaction. Channel formations are going to be very much prevalent, so just temper your aggressiveness into this market, but I think we're on our way to 8,600. With that, thank you very much. I'll again see you guys again this afternoon.